Hello there, Mavericks. Here we are in the end of March. First quarter is done. Books are closed. Everything is wrapped up. And we're going to be looking at the second quarter going forward. This is Rob Reinhold. I'm joined by Darren Fisher. And let's get into what happened. Now, before we just jump into last week and what's going to happen this week, I kind of wanted to just show you a little bit of where we were in the first quarter. And this is just the sector performance. And take a look at this chart here. You can see that this was a tale of two markets. The first quarter of this year, tech communication services were the stars. They led everything. Everything else was pretty lousy. And you can see here, we actually had 5 of the 11 sectors were actually negative for the first quarter of the year. When you take a look at this market, outside of tech, comm services, and some consumer, it was not a great first quarter. Now, we have been pointing this out for about the last 3 to 4 weeks, that the NASDAQ and comm services were going higher and everything else was pretty much going lower. And we said one of two things had to happen. Either the NASDAQ was going to pull the rest of the market up with it, or the rest of the market was going to pull the NASDAQ down with it. And we definitely got our answer to that question last week. We had a big rally. We had a big rally in markets. And so now we have the Qs broke out of a yearly high. So they're the highest they've been for not just this year, but probably going all the way back to last August. The S&P is now above the 50 MA. Everything looks much more bullish here at this point. All of the stories that you had last year that caused stocks to go lower for the whole year have pretty much dissipated. I'm not saying they're gone. Like, inflation is still here, but it's dissipated. We had yields that were just above 4% like 6 weeks ago. They're now down to like 3.4, 3.3. We have a US dollar that was so strong last year has just given up a lot of its gains and continues to go lower. All of the things that made us bearish last year have really dissipated. And now when we take a look at the odds for the next rate hike in May, the markets are now pricing in only a 50% chance of a 25 basis point hike. Everything has kind of unwound. All the reasons that the markets tanked last year. Look, I am not saying that this is a great economy and this is a wild bull market. That's not what I'm saying. All I'm saying is all the things that you could have used as an argument to be ultra bearish last year have really kind of dissipated. We had one big bit of news this last week, and we talked about it in the trading room last week. We said, look, the Friday core PCE price index is the big news. As you can see, it came in less than expected. So year over year inflation is falling. Month over month inflation is falling. And this is, again, very good news for the market because they have been pricing in that the Fed is going to start to back off. So this is where we are. This news, look, like I said, when I saw this core PCE price index on Friday morning, I thought to myself, it's not that great of news, but here's what it wasn't. It wasn't terrible news. So Darren, what do you think now that we've got all this information, we've got this 50% chance of a 25 basis point hike in, what do you think the market is thinking at this moment?
I think the market is thinking the Fed is going to blink and pause in raising interest rates. And that's currently the big bet right now. Now, whether that comes to fruition or not, we're just going to have to wait and see. I give you my personal opinion. I think it's going to be a mistake if the Fed does take its foot off of interest rate hikes. That's only going to be kicking the can down the road, and we could end up, inflation could, if they did that, inflation could very well surge, and then we'd be in a worse situation than what we currently are now as far as inflation goes. But I really think that's the bet the markets are making, that the Fed is going to slow down their interest rate hikes, possibly pause. I think that's the bet that people are making right
now. And we absolutely saw that bet even get stronger last week. So last week, if we take a look at the numbers, the Dow up over 3%, S&P 3.5%, the Qs 3%, the Russell, who has been just the worst of all the indexes, actually put in a very nice week, up 4%. Oil that has been all the way back down into the 70s, up 9%. And gold is trading at almost all-time highs right around 2,000. Everything across the board was bullish here. Now, I really want to focus in on these charts. Here we have the S&P. And the S&P, we talked about this range. Now, last week, we said this was the range. We were in no man's land. We were between the two moving averages. We had one day up, one day down, one day up, one day down. We said last week, until we break out of this area, we don't really have a bold call on the market, but we think by next week, we'll have a clearer call. As you can see here, we broke out above the March high, and the S&P looks like it wants to take a run at the January high of 415. Now, when we come over here to the NASDAQ was screaming buy this whole time. The question we had was, is the NASDAQ going to pull the market up, or was the rest of the market going to pull the NASDAQ down? And there's no question of what happened. There's just no question at this point that this market is ultra bullish at this time. Now, again, I'm saying ultra bullish at this time. I am not saying that we're going to see another bull market like we did in 2021, because I actually don't think we're going to see that. The economy is in a wildly different place. We are not in a high growth economy right now. We're in a fairly low growth economy at the moment. So I want everyone to kind of temper their bullishness a bit, especially looking out any more than 2 to 3 to 4 weeks, which is what all my statements are about. I am not saying that this is a once in a lifetime opportunity to buy stocks at low prices, because I don't believe that. But I think in the short term, looking as a trader over the next couple of weeks, I think the prices most likely move higher. Would you agree with that, Darren?
Yeah, I think you've got to say that. The technicals are up there. I mean, the one caveat to that is whether or not we pull back early next week and confirm that what was previous resistance is now support. That's the only hiccup I can see coming. If we pull back down to that 310 area and confirm that and bounce off that, confirm that support, that's the only thing I could see that we could possibly do. But looking at Friday's candle, there was massive interest in holding through the weekend. So obviously the fund managers, the decision makers, decided that the risk was not holding through the weekend and missing out on some gains. So I mean, that's what that candle tells me. And the last 3 days on slightly rising volume as well. So money came into this market. It got put right to work. And with that candle right there closing very nearly at those highs, there was just no selling pressure. Any selling pressure that was there was probably just eaten right up. I mean, if you took a look at the tape, the bid was thick, especially the last couple hours of the day. People had money to put to work, and they just kept eating everything they could.
Hey, Darren, one of the knocks I heard about this rally this week was the fact that we are at the end of the quarter. And there absolutely probably was some window dressing. For those of you that don't know what window dressing is, it's where funds buy all the stocks to make themselves look good because they have to provide quarterly reports of what stocks they own. So at the end of the quarter, people tend to pile into the best performers to show people like, hey, we owned Meta, we own NVIDIA. And so you tend to get these end of the quarter rallies. I would not be surprised if we do get that pullback next week, because I do think some of this movement this week was due to window dressing. What do you think about that critique?
Normally, I would agree wholeheartedly, though. I'm looking at the last four candles. I'm really looking at the last four candles, and the buying pressure was there, and it wasn't necessarily in the strong names. We get to the sectors, you're going to see that we have really good growth, really good advancements in almost every sector. So this was a broad-based rally that I don't think can be totally explained away by window dressing. I'm sure there was some of it. It happens all the time, but this was fairly broad-based.
Well, you can see the VIX shows that the fear was leaving the market. The fear that we got from the banking crisis has quickly dissipated, and we're almost back down to where we were before there was any sort of a banking crisis. The market is bullish. There is no technical reason to remain bearish. There's none. So if you remain bearish, it's because there's something inside of you, some belief you have that you're holding on to, and you're ignoring the data right in your face. Let's talk about where the market is likely to go. Now, look, anytime we talk about where the market is likely to go, we are thinking about odds, we're thinking about probabilities, we're thinking about risk reward. None of us have any idea where the market is actually going to be in 3 weeks from now. But here's my call, and I'll turn it over to Darren after this. I think that we've had such an outperformance by tech and communication services, and the rest of the market was so lousy. Now, I think everyone's looking at this market, and they're looking at stocks like Meta and Nvidia and saying, those are up 100% for the year. Maybe I should go buy some of these beaten down banks. Maybe I should go buy some of these sectors. I think we get a broadening of the rally, and it means that there's less buying in the FANG names, in the things that have been the hottest. I'm not calling for them to go down at all. I still think they go up. But I think you start to see a change where we had the NASDAQ outperforming the S&P. I actually think we start to see the S&P outperforming the NASDAQ. What do you think about that call, Darren?
Yeah, perfectly plausible thesis. I mean, you look at it, some of these large names that have gone up so far, and you're looking technically at where they could go. You're looking at Fibonacci extensions. You're looking at prior highs, from 6-8 months ago. You're thinking, I've only got 1 or 2% upside here. It's time to go bargain hunting. Now, I don't personally like to bargain hunt. I think it's a fool's errand. But when you're slinging around the type of money that these institutions are, you kind of have to. If you're looking at something that's made a bottom and it's bounced up and it's 3% above the bottom, but your next real technical resistance is 7% to the upside, that's a 7-to-3 reward to risk ratio. That's probably what I'm going to be taking if I absolutely have to. If someone put a gun to my head and said, you have to allocate this capital right here, take the 7-to-3 bet any day.
Absolutely. And I think that makes some sense. We'll see what happens. The outperformance might remain in the Qs, but I'm going to be taking a look outside of the Qs for some new longs. Now, one thing to mention, and I'm actually kind of proud of myself this year, is that I remembered the Good Friday holiday. I've been trading for about 25 years. And I want to say that I've remembered this holiday maybe 4 out of the 25 years. Now, most of the time I learn about it like on Wednesday, like, oh, markets are closed on Friday. I remember one year I woke up on Friday and none of the prices started moving at 9:30 Eastern time. And I thought, what's going on? I mean, that's how badly I've made this call. So markets are closed on Good Friday. Markets will close on Thursday. That means any options trade you have, they will also need to be closed out by Thursday if you have weekly options. Now, strangely enough, typically when you have a Friday holiday, the government decides to move reports around. This week they didn't. We are going to get the U.S. payrolls report on Friday when the market is closed. So expect there to be a big gap come Monday, either positive or negative based on this report. You will not have a chance to react to this report. So if you have positions going into Thursday, just understand that on Monday, whatever happened with this report, you're going to have to live with. So if you don't want to take that risk over the weekend, then we suggest that you close positions out that you're worried about on Thursday before the bell closes. We also have ISM on Monday and the ISM Services PMI on Wednesday. So those are going to be the big reports here. And I want to just reiterate that if you don't want to hold through a payrolls report, you must have your positions closed by Thursday. So let's break down our score here. Now, I put this at a 1.5. I really wanted to give this a 2, and technically it is a 2. But the little window dressing thing that I talked about, I'm not ready just to go +2, because +2 I get a lot more aggressive. So I'm going to get somewhat more aggressive, but not super aggressive. I've got a +1 for the week. If it's a -1 next week, that won't surprise me whatsoever. But I think these markets are showing us that over the next 2 to 3 weeks, a lot of the concerns have been removed And now we can see that there is more money coming into the market than leaving it, which means prices likely drift higher. But as Darren always says, the sectors will tell the tale. So let's take a look at these sectors.
Yeah, so you can see, as I was saying, you look at tech and you look at communication services. Comm services was up 2 1/3. Tech was up 3.46. You had a lot more sectors that did a lot better. I mean, utilities up 3, real estate up 5 1/4, industrials up 4.4. Even financials were up 3 3/4. Consumer was up 5.6. Materials up 5, energy up 6. I mean, so you've had 4 sectors outside of tech and communication services that were above 5% gains for the week. That's what makes me think that this is more broad-based and less window dressing based. Just the performance right here. Everything caught a bid right there. Healthcare did the worst, but they were still up 1 3/4 for the week. So everything caught a bid this week. If you were short, you hurt. If you had gotten long a couple of weeks ago, you're really happy right now. And it really didn't necessarily matter which sector you were in. So let's take a look at these things individually. And you see, with utilities coming up right there. I mean, last week I was at a -1. Utilities came up so far, so fast. I'm at a +1 right now in utilities. Got a nice candle on Friday, long lower shadow right there. We're breaking through, see what January, February's highs right there. And it looks like we're firmly, we're not going to say firmly above the 50-period moving average, but we've got 2 candles above that 50-period moving average, and it looks like we want to go up. So, I mean, this is one of those ones that's looking pretty good. It doesn't look as good as some other stuff, no, but you got to remember we were bearish, on utilities, for a good 6-7 weeks, and now it's just turned. I mean, that's just the case for a lot of these things. Moving on to comm services. We were at a +2 last week. I'm still at a +2 this week. We just broke out of a nice little range right there that we had, broke above 57, and we're up there. I just want to see a little bit. I mean, that's a little bit of a stretch to get all the way up to 59. And I'm not saying it couldn't happen. I mean, that's the next logical place for resistance to happen. But with the relative underperformance of comm services, does it just drift up that way, or do we actually have some momentum behind it to sprint us up above that period? Time's going to tell right there. But once I see a few more candles, I could go to +3. Once that 20-period moving average, it's just crossing that 50 to get that positive correlation right now. Once I see a little more space between that 20 and the 50, with the 20 above the 50, then I'll be more than happy to say +3. Right now, let's just give this one a little bit of time. It doesn't look bad. There's just some things I think that look a little bit better. Down here to real estate, this was at a -2 last week. It's, now it's between moving averages. We're to 0. And this one, you've got really some clear sailing up to that 50-period moving average right there. Again, this is the thing. You come very far, very fast. You look at the last 4 candles that we have, from 35 up to 37. That's nearly, that's a very substantial move to have in just 4 days. Are we going to run out of gas? Or are we just going to coast a little bit upwards? That's the thing. So I'm at a 0 on real estate right now, but it's much better than being at a -2 that we were last week. Industrials, again, I mean, look how far these everything came in just 5 candles right there from a low. I mean, going up there. I mean, that's a very significant move to get. Now we're above the 50-period moving average, going from a -2 to a +1. That's a 3. What we would call a 3 deviation move, in a single week, to go from a -2 up to positive, where we think, okay, the industrials are showing some life right now. And let's look at the on the long side of some of these. So, really major shift in industrials in just a single week. Looking at healthcare, not as much movement. Healthcare didn't perform as well. It still performed well. It didn't perform as well as a lot of other things. We went from a -1 to a 0. We're just kind of in this, broke out of this ascending triangle right there. We're going to see what we can do right here. I think a 0 is about as good as we do. You get me above the 50, and I'll reevaluate. But this one, looks like it just doesn't have the momentum to break through. This is going to be another one of those ones that just meanders upwards, I think. Once it breaks through the 50, like I said, I'm happy to go positive. Until it does, then I think there is a very significant chance that we go sideways in healthcare to try to build up a little more momentum. Financials, even though financials had a pretty good move, they were at a -3 last week. I'm still at a -2 on financials right there. We're well below the 50. We're just about to touch the 20. Really good move, but you take a look at it, we're still in a range. We're just in the top end of a range that's been going on for close to a month right now. And if we can break through that, again, I could go to -1, I could go to a 0 right here, but there's been a lot of damage done in the financial sector. And I think, despite what people are saying, I think there's still a lot of hesitancy. There's a lot of unknowns out there. Looking at consumer, we were at a -1 last week. We're at a +1 right now. Things were getting a little bit compressed. We're above the 50-period moving average for 2 candles. Got a little ways to go. So I'm mildly bullish on consumer. It's come up nicely from several weeks ago, from about a month ago, but this is another one where we've just broken out of a range or broken through resistance. Are we going to make that push up to the next resistance point, or are we going to meander up or go sideways to build some sort of strength to get up there? That again, that's the question. Tech, I was hesitant to do a +3 last week. I was at a +2. This week definitely shows me +3. This is broke through that range right there. We're at tech's at what looks like a yearly high right now. Good, decent volume on everything right there. So this is this to me is a +3. I think that this is where you want to be. Now, back to your point, Rob, with everything so expensive in tech and the rest of the sectors getting bids, is there a chance that this does remain technically a +3, but then just kind of meanders sideways and goes up? I don't think people are going to be selling their tech holdings, but I'm not necessarily sure that they're going to be instituting new holdings. So while it's a +3, I could definitely see this going to go sideways for a while as some of these analysts start making recommendations, on some of those 7-3 bets of where to put money, rather than having something that you've only got 1 or 2% upside. That's we're kind of at this extreme right now, but technically we're at +3 in tech. Materials last week was a -2, and it's firmly in the 0 category right now. I mean, you can see this came up really far, really fast, and I think it's got to stay at that 0. I think it's got to build some of the more energy before it can make that push back into positive territory right now. But everything, like I said, everything caught a bid. Materials was up there with everything else. You will wait and see where it goes. I mean, that's a great looking candle on Friday right there. I mean, this is not something you wouldn't see a lot of things in the materials sector that would be subjects of that window dressing. I think that was genuine buying that we saw. So we'll see if this can continue up. Materials was looking good for a good part of late last year and early this year, and it may resume its attractiveness here in the next couple of weeks. Very similar situation here in energy. It's not quite as strong as what materials is, but you see with oil, going up 9% for the week. I mean, we went from a -2 to a 0. We're right here, kind of. It got a little bit of resistance from a couple of months ago, sitting right there. This is one of those ones where I think it has the potential. If oil keeps going up, I think it definitely has the potential to drive the energy sector up even further. So significant shift in the way things looked from last week to this week. Last week, if you remember, we didn't have anything. The only thing we had was communication services and technology were positive. Everything else was at a -1, 2, or 3. You can see we've definitely spread out over the past week. Technology at a +3, that's the best looking run right now. Technically, comm services as well. We talked about whether or not people are going to continue to buy in those in those sectors, or whether they're going to start devoting some money to other things. Consumer, industrials, and utilities all looking mildly bullish. Pretty good technical gains that they've had just in a single week. Healthcare and real estate are at a 0. Now, even though energy materials had some good things, I mean, they're still not looking as good as some other stuff. And financials, worst looking sector right now at a -2. So let's look at a couple of trades. So in real estate, last week we had a position in Southern Companies right here. We were sideways to long, and we got exactly what we wanted. SO was up 1.44%, so this is a trade that's looking pretty good for us. We've got another week or so on this one, so it's definitely looking pretty good. This week we're looking at KE Holdings. Symbol for that is BEKE. This is another one we're looking sideways to bullish. You know, ways you want to play it, just go out to April and play that 18-20-22 butterfly. If you want to be a little more aggressive, you get into a diamond call spread. You know, this is something that I think I would play, you know, so we're looking at, you know, a 5% move in the next 2 weeks. You know, if you want to get a little more bullish, you go out to that April 21st, 1750, and then short next Friday's, actually next Thursday's 1950 against it. That's probably a little bit better target. And then you still got that 1750. So I don't like to play things too tricky, but if I were to do that diagonal and we could get us up to that 1950 level in a week, then I think I would change that to 1750, 20, 2250 butterfly the next week with that 1950 right at the midpoint right there. I think that's a little trickier play, not something we always like to do, but I think, you know, have a little bit of an upside and then look to build some more momentum. That would be one thing that I think you want to consider. Okay, last week in communication services, we had Baidu long. Now, Baidu was down about 3.5%. I mean, but it's just a classic bull pullback right here. Now, it did go counter to the rest of the market, but it's still strong. No one could say, looking at this chart, that Baidu was weak by any means. It just didn't participate in this week's rally, and but we're at nice support right here. So you've got a little bit more time on this trade. If it bounces from here, I think we're going to end up looking pretty good. If not, that's why we size things for max loss. This week, we're looking at T-Mobile, TMUS. We're going to play this one sideways. Best way to do it is go out, give yourself 2 weeks, go out to the April 14th, do the 142, 146, 150, call butterfly right there. You're only asking it to move up, $1.15 in the next 2 weeks, and I think it does it. I think it wants to stay kind of in this range, looking pretty good. In healthcare, last week we went long AbbVie, and that was up mildly about 0.85%. So this one's looking pretty good. It's being a little more sedate, but you take a look at the action in the healthcare industry, you can see why we didn't have some massive moves. This still looks great. You've got more time on this trade. Even if it just drifts up, I'll be happy doing that. If it gives us a nice couple, 3, 4, 5% move, I'll be happy with that as well. Regardless, the trade's looking pretty good. All right, so this week we're looking at a play in Dentsply. Symbol for that is X-ray. Now this one only has monthly options. So if you wanted to play this, 40 looks to be a pretty good target here. When do we get there though? So I think the best way to play this is to go long May's 35s. Okay, that's a ways down there. We've got a lot of delta built into those. It just doesn't have that many options to go with. Then you short April's, the monthly April's 40s against it. And the only thing we're asking this thing to do is to go up 75 cents in the next 3 weeks and hang out there. And this is one, you see the scaling doesn't move very far, doesn't move very fast. We're not asking a whole lot of it, but you've got some time. Now, having the monthlies like that it does give you some interesting things. I mean, you could buy back that 40 early if you wanted to. I would personally just keep it unless that thing started to get up to 42, 43. Then I would take the whole position off. But if it just hangs around that 40 level, I'd let it go. And then I'd maybe consider as soon as April expiration, maybe rolling up into, selling that 35, going long the 40 call, and then looking at something, possibly just turn it into a May 40-45 vertical spread right there. But again, the first hurdle we have to get to can we get up to 40 here in the next 3 weeks? And I think we can. X-ray looks like it wants to go that way.
Yeah, I really like this trade. Just diagonal call spread of 40. That's a no-brainer. This one looks really solid. All right, in industrials, last week we had a call on long FedEx. We love these types of trades. Huge gap. We get a couple days of a pullback, and we get this nice buy signal off this. The stock was up 5% last week. There's one more week on this trade to go. So this thing looks fantastic. It looks like this is going to come in at a max gainer for us on a vertical spread. This week is Fastenal. Now, this is a trade we did a couple of weeks ago. Close it out for a gain. And we basically did the same thing. We did a diagonal call spread. Diagonal call spreads are a mildly bullish position. You can make them a little bit more or less bullish based on the strike prices. But basically what you're doing is you're putting yourself in a situation where as long as it doesn't go down, it's going to be a nice trade. 55 is going to be this point where we want to really trigger here because that's going to be our max gain point. If it takes off and runs past that, yes, we still make money, but not as much. But if it hangs out anywhere in this area, it is going to be a positive trade. So this is a bi-directional trade. If it goes up, we make money. If it goes sideways, we make money. The only one we don't want is for it to go down. And you can see that this thing has been solid. Even when the market was really rocky in February, this one held. So there's lots of good things happening here in Fastenal. In financials, last week we gave it a don't trade it. Remember, last week we were still in that range of the S&P. We had still had maybe a couple banks failing. This last week, they kind of cleaned up SVB Bank and some of the other banks. So we said, hey, look, until we have a little bit more clarity, let's just avoid it, which is totally fine. This week, we've got Blackstone. Right now, Blackstone, for those you don't know, is a huge asset management company. They own pretty much everything. But what we see here is a bull flag pattern. Now, if you go back into the chart, this had a much bigger run than we can see. So when something has a big run, it only makes sense that there's going to be a little bit of a sell-off. And so you get this really lazy downtrend that doesn't really have much power to it and only gives up about a third or a half of the previous gain. Once it breaks out of this top trend line, that's the buy signal. And you can see we got that here on Blackstone. So the question is, okay, how do you want to play it? Now look, this is where you get to decide how bullish you want to be. I, like Darren, am still not sold on the financial sector. I'm still not super bullish here, so I'm going to do a +1 type trade. I'm going to do the 85-90 diagonal call spread, and I'm only going to do it for a week because I want to see what Blackstone does this week. If it doesn't do anything, if it doesn't perform and it still looks sick, I'm just going to bail on the whole thing. But if it hangs out here or goes up to 90, I'm very happy because that is profit for me. The only thing I don't want is for it to tank. And again, I don't think the market is in that place right now, unless there's some news that comes out where financials really fall apart anymore.
So in consumer, last week we were short TJ Maxx. And TJ Maxx is one of those ones that caught a bid. You know, it was up 4.6% for the week. You know, this one, it may fall back down. It's going to take the market to pull it back down. This one is just really at the whim of the market right now. It has been for the past week. That's fine. This is why we trade in baskets. You know, we have one trade to go against us. We're really not worried about it. This week, we're looking at Wynn Resorts. Now, this is in a high base, a nice bull pullback there. It's, you know, pulled back a little bit, and then it just wanted to, you know, it's just starting to go back up there. So how do we want to play this? Now, the resorts can be really, really volatile. So if you think that we're going to continue on in an upward market, then go to those April 28th, 105 calls, size them for max loss. You're going to put your bet on and say, I'm willing to risk X amount of dollars, and if it goes to zero, I'm not going to cry about it. But, you know, you get something like that, that could come out to be a very, very nice trade. If you want to play it a little more conservatively, the 110, 115 bull call spread is going to be, you know, much more conservative. But it just depends how you want to go. You're asking for a little bit, you know, in about 3 weeks. I think, though, this is one of those ones I would play the unhedged long calls, but sizing them for max loss. Don't do that very often, but I think this is the way to do it, especially when we get a nice little breakout like that from about a 3-week base. Technology. Last week we were long Fastly, and Fastly moved very fast for us, pardon the pun, and it came in really, really nicely. We were long, and it was up 10.79%. It was, half of that was just in Friday's candle right there. So, I mean, this is still looking pretty good. So you've got another little bit of time on this trade. Keep it. This is one of those gifts. You take them when they come, and those offset some of your trades. You're like, why did that happen? But really, really happy with this trade right now, and we're going to hold this one until expiration. Like kind of right now is DocuSign. We're in a nice bear rally. So we had a massive drawdown, massive drop in the price right there. And then we clawed our way back up. We haven't been able to get up to the highs, but we're in this nice base, and we're letting things come to us. So I want to see a little bit of a breakout of the top of that range. Just give me one candle above Thursday's candle. Give me above Thursday's high, and then I'm going to go, give it 2 weeks and do a 55-60 bear call spread right there. So I'm going to short those 55s, go long the 60s. The only thing I wanted to do is just hang out here, going like that, 55-60 bear call spread. We're going to short the 55s. We're going to go long the 60s for protection. And the only thing we wanted to do is just either go sideways or just kind of drift slightly down. And we're in this range right there. Didn't really participate this last week. So this is one that I think, could just keep going sideways, and I'm quite happy to be in something like that.
The materials sector did not look so great just a few weeks ago. It's come back up to where it looks okay. When you take a look inside of the sector, the mining stocks are doing great. They're all doing very, very good. And the steel companies and the chemical companies, they don't look as good. So we had a trade on the chemical company LIN last week, and Lin was up 3%, so a very nice trade on this one. Everything looks great, should be a max gain for us, so we'll let this one roll. This one's looking really good. This week, we're looking at Newmont Mining. Now, I want to talk a little bit about, I'm just going to talk some fundamentals here. Fundamentals don't matter. I like to talk about them because they're fun. We call it cocktail talk here at Maverick, where it's just fun to talk about. If you go back to last quarter's earnings report, Newmont Mining laid one of the biggest eggs I've seen in a long time. Their report was terrible. Actually, maybe it was 2 reports ago. It was last summer. It was terrible. And the stock cratered. And we were actually short the stock. It was a very good trade for us. Made some good money. And you can see it's bottomed out. It had another just horrific fall from 55 down to 42. This is a mining stock that lost 25% of its value. That's bad. It's recovered, and I really like this price action here. So we had this bounce up, this big bounce from 42 all the way up to almost 50. So this is about an 18% rally, and there was no sell-off. Gold is knocking on the door at $2,000 an ounce. My call is that gold breaks out and moves to all-time highs. Here we have a stock that's looking to break out of some resistance. Now look, when you take a look at all the other miners, their charts look more like this. Looking at Newmont, it's definitely underperforming, so I don't want to be as bullish on Newmont. But I think this one's got a little bit more price stability to where I don't have to worry about there being a big pullback off of a little bit of a drop in the sector. So I'm looking at playing this one as a diagonal call spread as well. So the 47.50. So basically, we're looking to play it in this range. And as long as it stays in the upper end of this range, it's going to be a profitable trade. We're not calling for this to run up and make new highs. That would be a totally different trade. And if that was the call, I would actually choose a different stock. I want to be +1, mildly bullish here in materials, and I found what I thought was the best stock to do that in. If you're looking for a high flyer, this is not it, because this is actually underperforming the rest of the gold miners. I'm just looking for a stock that's going to hold in this area and give me a single or a double. Energy had run all the way back into the middle of its moving averages. Last week we had Valero as a sideways play, and Valero did not want to go sideways. So we wanted it to stay in this area here. And you can see by the end of the week, it had crept out. So we had a 1 week butterfly on it, and it ended up being about an 80% max loss on this one. So not everything, but not what we wanted. It was a little bit stronger than we expected. This week, we're looking at ConocoPhillips. There's some stocks in the energy sector that are still in downtrends. ConocoPhillips is one of them. And you can see that ConocoPhillips actually had 2 red candles on 2 very strong days in the market and a very strong day in the oil sector. So here we have an opportunity to take a mildly bearish trade. And this is mildly bearish, a 97-100 bear call spread for the next 2 weeks. We're basically saying we think it's going to be at the bottom of this area. It's going to be closer to 97. If it blows out above 100, we don't care because there's no risk to us after 100. We think this thing is likely to just drift down. We're not even calling for it to go to new lows. We're just saying we don't think it's going to go much higher here. We think that that's probably it to the bear rally, and we're looking to fade it a little bit. In basket trading, you always have to have longs. You always have to have shorts. So this is one of the better places I found for a selective short here. Well, that wraps up our trades we share. If you guys have more trades you want to share with the rest of the Maverick traders, log on to the website, go to the forum. We always love to see the discussion happening there in the forum. Wrapping this up, bullish technicals are here. If you've been waiting for a green light to go long, it's here. It's here. If you've been fighting this tape, if you've been fighting this market, and you've been holding on to some hope that this market wasn't going to go up, I'm sorry. You have to admit you're wrong here. Now, that doesn't mean that you have to become a cheerleader and think that this market is the greatest thing ever. No, you don't have to. But you at least have to say, hey, you know what? My bearish call was wrong, and I need to at least go to neutral. That's the best you could be. The most bearish you could be here is neutral or in cash. That's really the most bearish you can be. My call is we see a broadening of the market rally. I think this is an easy call here. I think that tech and communication services do okay, but I think we get a broadening of the market rally, and I really like some other sectors out there. I am not a super bull here, but in the short term, I'm the most bullish I've been in probably, let's call it 6 months, maybe 7 months. So take that for what it is. At some point, I will not be bullish anymore, and I'll come on here and say, okay, I'm not bullish anymore. But for the time being, I think that's where you want to be. So trade well, everyone, and thanks for a great first quarter, and have a great weekend. Goodbye, everyone.
Good trade, everyone.